Hi, I'm Ed Baldwin with your weekly wrap-up for Friday, August the 26th. Well, the market started the week higher, paused a little midweek, but finished the week on a positive note. The corn and soybeans, well, they got a boost this week from USDA, lowering the good and excellent ratings for the second week in a row. Corn, good and excellent, was down 2% this week, and beans were 1% lower. The wheat markets, well, they continued to bounce along, but they really didn't gain an awful lot over it. And the canola, well, it followed along as well, and it did manage to recoup most of last week's losses. Our November canola contract this week was up $37.40 a ton, and it closed out at $855.80. The canola was higher this week on the gains that we saw in the soybean complex. The crop is still 3 to 4 weeks away from harvest, and there is concern of the potential for frost damage to occur in some locations, which is keeping prices somewhat supported. The November soybean contract, well, it was up 57 cents a bushel this week. It closed at $14.61. The December corn contract had a good week as well. It was up 41 cents a bushel and closed at $6.64 a bushel. The December oat contract was up 16 cents for the week. It closed out at $4.03. And our December Minneapolis spring wheat contract, well, it gained 23 cents over the week and closed just over $9 at $9.10. The wheat prices, well, they're up on the drought conditions that we're hearing out of China's wheat growing area and India's decision to limit their wheat exports. Limiting the upside, however, is that the wheat shipments coming out of Ukraine and Russia's record large wheat crop. Our Canadian dollar this week, it kind of struggled a bit. It was down just marginally. It was down 18 basis points, and it closed at 76.76. It did try to get some help, or crude oil tried to help it out, I suppose you could say. Crude oil was up $2.70 a barrel, closing at $93.14. For next week, well, we do have a Stats Canada production estimate out first thing Monday morning, so trade will be looking for some insight on what the crop potential looks like for Western Canada. And unless there's some big surprises show up in this report, we'll be looking for prices to continue to soften. So we'll look for canola to continue for now trading that $800 to $900 a ton range while taking its cue from the vegetable oil markets. And wheat, well, it has been bouncing along in that $9 area. However, a break below $8.85 does open the door for prices to move towards that $8.50 level. I'm Ed Baldwin with your weekly wrap-up for Friday, August the 26th.